Hello everyone. You are on the Franklin Trade channel. Today in this video, we will talk about why beginners very often lose money in trading. Especially those who have just recently started trading. They come to the market and trade. They almost immediately lose their money, get disappointed, and never come back. And that's very unfortunate because you can and should make money here. Moreover, you can do all of this without even leaving your home. Make yourself comfortable and let's get started. Let's start with trading, of course, and take a look at all the currency pairs. I have already quickly reviewed them and saw a few interesting options. For example, the Canadian dollar and the Swiss franc. It looks great. There were some excellent levels here. There was a great breakout, and subsequently, the price pulled back but eventually went up, and you don't even need trend lines to understand that the price is going quite high. Let's see where our previous highs are. They are quite far from us, so the price still has room to move. And as we know, the price constantly updates highs or lows, or at least strives to do so. Well, let's say it's not the price that updates the highs or lows, but specifically the people, because they also move from level to level. But unfortunately, the payout percentage is too low for our work. So, we move on and look at a very similar currency pair. This is the Canadian dollar and the Japanese yen. It looks great as well. It is very similar to the same movement, sharply upward. We had a minimal level here, and we broke through it. And now it looks very much like we will definitely either stay trading sideways there or break through this level again. And here we are also unlucky, and here too it's a 60% payout. Unfortunately, this is very low, so we will not trade. Today, we are lucky with Switzerland and Japan. We can see that we have a very good level here, even though it's not a round number. Essentially, we have a very good sideways range from which the price has already bounced. And possibly, it will continue to move upwards and break through, or it might go down further. But we believe in a breakout, so let's see what our payout percentage is here. Really good. 82% is what we need. Advice is what we need. Burrow is what we need. The candlesticks are good, and there is volume, so we open a long position and wait for our breakout. Let's move the level a bit higher because I set it too low. In fact, it is probably even higher. The price is gradually starting to go up. Overall, we opened the position well, a bit. And the first problem for beginners is that they don't know where to open positions. For some reason, they don't want to work with the trend. They want to work against the trend. I noticed this a long time ago. When people see the price going down, they think it means they should buy. In principle, from a long-term perspective, when working with stocks, this is indeed the case. Price falls, buy. Price rises, sell. In our case, we work short-term, and short-term we work in such a way that we follow the trend exclusively. In this case, with the euro to Canadian dollar, we have an excellent downward movement. There are levels below, and trying to take a reversal here, although it is there, is a very bad idea. We need to work exclusively with the trend. Let's do just that. We'll open a short position for $100. Yes, it's not too much, but why risk your deposit and drive yourself into a debt hole if something goes wrong? And this is the second problem for beginners. They open positions with a very, very large volume that they are unable to manage and sustain. And our position on Switzerland and Japan closes in profit. Everything turned out great, but we didn't break the level. Perhaps the price will continue to go up in the future. Friends, if you don't understand anything about trading and want to learn, and you need someone to show you how, you can always reach out to me, send me a private message, and I will explain and show you everything. I also have an open group and a closed web group where we trade and earn really, really well. Money. It's easy and simple. There you can watch me, trade as well, learn in the same way, and of course, communicate with me. And in the future, I really hope that all of you will become truly successful traders and make money here. After all, we all know that about 80% of people lose money in the market. Therefore, you need to work as carefully as possible and preferably with someone who knows at least a little about trading. In our case, the Swiss franc and Japanese yen shot up. Let's try to take a standard counter-trend trade, which all beginners take when they see the price rising, slightly. On one hand, this is actually very, very true, because a sharp impulse is always corrected, always. There is a nuance here that you need to always time the expiration correctly, because taking a 5-minute expiration could knock you out. You might enter at the wrong moment. Therefore, this entry is quite risky, and I absolutely do not recommend it for beginners. And to be honest, we didn't enter at the very peak, although we had the chance to open a good position. And our position on the Euro-Canadian dollar, which was supposed to go down, went into a correction. It happens. And my advice to beginners is that you should always, absolutely always, cover your losses. At least partially, at least halfway, at least a little, so that your loss is covered. Here, our position closes in profit, and for the Euro-Canadian dollar, while there was an acceleration, we opened another position, but this time for a decrease and further downward movement because the market demands it, and we will cover a small loss. Let's just stand by, wait, and see how this all ends. It is ending with the price almost moving sideways, and we have absolutely no downward movement. Therefore, we can say that we made a small mistake here, and the downward movement did not happen. We will no longer cover the loss here, and we will not work with this currency pair either. Sideways movement is absolutely not for us. The price can go in absolutely any direction, and in principle, the price is no longer updating its lows, and there is a very high chance that the trend is about to reverse. Of course, let's open another position for $800, or rather, select $800 and wait for the right moment. It might be a sharp rise, it might be a sharp fall, but we definitely need to profit from it because, as you can see, the trends are very good and both Canada and Switzerland look just great. It's a pity the payout percentage there is very low. This is exactly why I don't like binary options. As for the euro to Canadian dollar pair, the price has once again reached its upper maximum. So, we won't think too long, and here we open positions with a good volume. Why did we do this? Because we are at the upper boundary of the local 5-second sideways range. If you look, the price moves within a certain range, and entering short at the highs is a very good idea. Meanwhile, the position closes in profit, and we have covered our previous loss and possibly even made a little profit. And it is visible on the 5-second chart how the price sharply drops down with a huge gap. I am urgently changing my direction, and in this case, we will be entering a long position in the market. The reason is simple. I mentioned this to you a few minutes ago. After sharp impulses, there is always a correction. We waited for this momentum, and the correction went in our favor. Friends, there is nothing complicated about making money with binary auctions. Subscribe to my channel, hit the like button, and thank you all for watching.